Hello, everyone. I am about to go in on this tax plan. We all know that our new president is Trump, and he has been talking about a tax plan. So, taxes is my thing. I am Terry Chantel. I am a tax specialist. I've been in the business for close to 10 years now. I also specialize in business credit and credit repair. But today, I'm going to talk about this new tax plan that we have. Um, I love tax law. I love reading about taxes. I love knowing what the new updates are. I love figuring out how I can help my clients for the upcoming tax season. Tax season is right around the corner, so of course, it's that time where I start learning what's new. So here we go. The tax plan. It has about three, four components to it that are brand new that is blowing my mind right now. Okay, it's blowing my mind, and I'm going to attempt to not bore you guys and go too deep, because when I get to talking about taxes, I can go deep. So I'm going to talk to you about examples so that you can understand what the new tax plan could mean for you. So first of all, this is not in effect yet. It's the proposed plan. It hasn't been passed yet. Second, if it is passed, it will be for 2017. So it will not affect you until you file for 2018. So here's the first thing, and I'm going to start here to make sure that we're all on the same page and understanding. So number one, the first thing that the tax plan, that Trump's new tax plan is going to do, is it's going to eliminate the head of household status. Okay? Gone. There is no head of household status. So that does two things. One, it affects the standard deduction that you could claim if you normally would file as head of household. If you don't know what a standard deduction is, here's what that is. The government gives you a certain dollar amount to deduct from your yearly income to say, we are not going to tax that dollar amount. So right now, the standard deduction for a single mother, okay, a single mother who makes $35,000 a year, that standard deduction is, we are not going to tax $12,000, about $12,000 of your money. The head of household status was created to account for the burden of raising kids. That is the whole point of that status. Everyone knows that single, they get charged the highest tax bracket versus some married filing jointly. The head of household is kind of right in the middle. It says, yes, you aren't married, you are a single person, but you do have the burden of kids financially. So we're going to give you a better tax rate because of that. No longer, okay? So if you were filing head of household, if this tax plan were to pass, you would now get filed as a single person, as the same status of a single person who does not have kids, okay? I'm going to give you an example, a real life example of how that affects you. On top of the head of household being eliminated, he's also getting rid of personal exemptions for everyone in your household. What that means is, works the same way as a standard deduction. It takes away a piece of your income that will not be taxed. So if you made $20,000, I'm not going to tax $12,000 of that money. So that helps you out. Now I'm only taxing you on $8,000 of your money. But the exemption says for every person in your household, on top of the standard deduction, I'm going to deduct another $4,000 for each person in your household from your income, so that you're not taxed on that money either. That will no longer exist. So there's no head of household, and there's no, he's repealing personal exemptions, okay? He's repealing. So between those two things, you're going to see an increase on your taxes, okay? So a real life example, if you have a single parent, and I'm going to use the demographic of my clientele, and that's who I think about first. Who is this going to affect in my clientele? Because about 50% of my clients are single mothers. In my business, I had over 300 clients last year. 50% of them were single parents. The other, I would say 40% were married, and about 10% of single kids. So under the new Trump plan, if you are a single parent, and I took a lot of notes because I read about 40 pages of this plan and I really tried to digest it so that I could keep this short and sweet and not lose anybody. But under the new Trump plan, a single parent who makes $75,000 with two kids, okay, would see an increase of their taxes at $2,400, a $2,400 increase in their taxes under the new Trump plan. Why? Because there's no head of household, which means that normally, for example, in my situation, I am now at a higher tax bracket, okay? 10% more under his plan, okay? So 10% more of my money now is going to be taxed because I'm engaged, I'm not married. So 10% more of my money is going to be taxed. So think about that. Think about the average person's tax return, okay? The example I just gave, $2,400 increase in their taxes. Most people, that's roughly the amount of most people's tax return in the first place, right? Right? So the days of looking for those big refunds, which if you're, that's another story. If you're filling in your W-4 right, you really shouldn't have that big of a refund anyway. But those days, most of us kind of look forward to that refund. So this just ripples down to that time of the year where you're not really getting that refund check anymore. So just prepare your mind for that. Just prepare your mind for that. Another thing he's doing is he's consolidating the tax brackets. So what that means, so right now we have 7 tax brackets, okay? They range from 12%, lower income are charged a 12% rate, the highest, the wealthiest are charged at 40%. So he's bringing that down to only 3, which is 15, 25, and 33%. So basically, who does that benefit? The wealthy, okay? So the lowest tax bracket is no longer 12%, it'll be 15%, okay? And the highest tax bracket is no longer 40%, it's 33%. So who does that benefit? So the wealthiest are getting a 7% cut in their tax rate, while the lower income are getting the 2% raise. Nice. That's all I have to say about that. It is nice. So my point is this, okay? Changes are coming. Changes are coming, and I know a lot of us, the tax season is the time where we get ourselves together. We have a little bit, we look forward to that money. We look forward to that. A lot of people, you get your money throughout the year. You don't let them take so much out of your check, so you're breaking even. But a lot of us really look forward to that money. And I didn't see anything about the earned income credit being affected, but I didn't see anything that said it would not be affected either. But as a tax professional, we all know that head of household is the only way you can get the earned income credit, which is a refundable credit, which means that even if you were a hairstylist, you did not pay taxes all year, you still paid taxes taking care of children, obviously. So the government gives you earned income credit. That's what you call a refundable credit, regardless if you paid taxes or not. If you qualify, you still get those taxes that you estimated that were paid, you get that back, okay? So I don't know how that's affected. I do know, and again, I'm not going to try to go too deep. He is proposing what he calls a earned income dependent care program that you have to pay into, similar to the dependent care program that you have at your job. I guess the government is going to create one, and then he'll match it 50%. But even in the examples that are laid out and crunching the numbers, it still doesn't offset the fact that he did 2 things. He came up with that dependent care, and he also he raised the standard deduction, but it did not offset the fact that he's taking away the personal exemptions. Okay, so I hope I'm not misspeaking with my terminologies here, but the standard deduction has been raised, but the personal exemptions are gone, and the head of household status is gone. So now you're going to be taxed just like a single person, and on top of that, you don't get the exemptions for the 3, 4, 5 kids that you have. So more of your money is going to be taxed. That's just the bottom line of it. I could go through examples all day long. A single parent that makes $50,000 a year. If you have 3 kids, that used to be me at one point. I have 3 kids. When I first, years ago, first started my career, that's about how much I was making, close to 10 years ago, $50,000 a year with 3 kids, okay? My tax bill would be increased to $1,100, to $1,100, an additional $1,100 to my tax bill. I would have been upset about that. I haven't gotten a refund check in years. I pay taxes now, so I'm just upset for my clients right now because I don't pay taxes all year. But the thing that I'm that I'm pointing out is this is why financial literacy is so important. This is why knowing the tax laws is so important for yourself and not just for the wealthy. We all heard Trump say that he didn't pay taxes. There are legal ways to do that. And that's why you don't go to anybody to do your taxes, okay? You need to go to someone that knows what they're doing and that knows the legal way, okay? I do taxes, not hookups, okay? You need to know the legal way to decrease your tax bill. This is why it's important to invest in your 401k. This is why it's important to use those medical spending accounts that your job offers. This is why it's important to use that dependent care that they offer, those accounts that they offer with your job, because what that does is it shelters your money so that it's not taxed. It's the same money, it's just flowing through their accounts, and then you take it back out to prove that you use this money on daycare or medical expenses, and then that money is not taxed. This is why you should pay attention to those things. This is why if you don't know how to pay the least amount of taxes, you need to go to someone that knows that, because the changes that are coming are going to severely affect it will affect 11 million single parents, okay? This new tax plan, it will affect all of those single parents. Those are the people who voted for him. Okay, the people that came, out from the woodworks in Oklahoma and everything. Yeah, this affects you. This affects you, yes. Okay, this affects the lower income people. Okay, the tax brackets have collapsed, increased on the lower end, decreased on the higher end. Know your stuff, okay? Take filing your taxes seriously. Take filling out your W-4 form seriously. Pay attention. That's all I can say. I get so upset when I get clients that come to me and I look at their taxes and I'm like, why didn't they write this off? Why did you not know that if you structured it this way, you could have paid less in taxes? And another thing, if you own a business, get legit. Get legit so that you can legitimately write off your expenses. Get legit. Get an EIN number. File for an LLC if you need to, or just get a DBA if you can't afford to, so you can get a bank account. Get legit so that you have a means to shield your income, to have more deductions for your expenses. So that is the tax plan in a nutshell. I hope that you understand it. I hope that you look into it for yourself, and I just want to tell people this so you can know. I mean, next year is just around the corner. Next year, so January is coming up. So you need to plan your year according to what this new tax plan might look like. You may not be getting that big refund like you normally do. So you're going to have to be strategic about your finances to achieve the same goals. That's making sure that your credit is straight. Because a lot of times that credit fills in the gap. That's making sure that credit is power. Cash is king, but credit is power. Get your businesses legit so you can write off those deductions. Okay? And make sure that you are using every avenue that you can to shield your money so that you are paying the least amount of taxes as possible. Invest in your 401k, invest in your IRA, use your dependent care account, use your medical account at your job if you have that, okay? If you have any questions, inbox me. I'm available. All right, I have to go. Peace.